What is the biggest misconception about support and resistance? You see, most people think that they're imaginary horizontal levels that we just randomly draw somewhere where the prices are more or less in the same area. This is totally wrong. Nothing is random here. There are multiple ways to determine precisely where is support and where is resistance. But let's first define what are these levels. Support and resistance levels are used to identify critical areas of the markets, like the overall market direction and timing for entering and exiting positions. Support refers to the area in the price chart where prices have dropped, but are also struggling to break below. So usually a bearish move which turns bullish has likely met the support level. Now resistance is that level on the price chart where the prices have risen, but are also struggling to break above. So a bullish move which turns bearish has likely met the resistance level. What this means is that the price is more likely to bounce off of these levels rather than break through them. It is better to actually think of it as an area or zone, since in a real live trading environment, the prices will break these levels by a few pips or more regularly, and it doesn't always mean that we can disregard the level as soon as it is broken. So let's think of it as an area. If and when the price reaches the support and resistance area, there are three main things that can happen. The price can bounce off the support level or the resistance level, or the price breaks the level and continues its movement in a direction until it reaches the next significant level of support and resistance, or it makes a false breakout, a trap, when it breaks the level but reverses shortly after. This is the point most beginners panic and lose their investment. When the price breaks the support level, for example, traders who are buying are losing money. Nobody wants this to happen, so the buyers are waiting for the price to rally back up to this previous support level where they can sell and break even. This creates even more selling pressure, so the price can't break it, falls down, and the old support level now becomes the resistance level. Here it's resistance and here it is support. So most of the time a broken support level becomes resistance in the future, while a broken resistance level becomes support in the future. This is very important to understand early in your trading career. Now, how do we actually determine these areas? There are three most popular ways. The horizontal support and resistance levels are the most basic type of these levels. They're simply identified by a horizontal line. First, we zoom out the chart so we get a little bit bigger picture. We have the 1 hour chart here, so we zoom it out to 2 days. Then we need to spot a past area where the price had difficulties to break above or below. And as we can see, here the price struggled to break above, and here it struggled to break below. We want multiple touches to this area just to be sure. Once we have found the level, we mark it with the horizontal line, and once the price approaches this horizontal line again in the future, there's a high chance that the price will retrace from that line, creating an opportunity to open a profitable trade. Another type of support and resistance level is the round number level. They form around round number exchange rates. These support and resistance levels are psychological levels, best observed on longer time frame charts. Traders tend to put their stop levels and profit targets around round numbers, so the number of market orders around those levels increases. Round number support and resistance levels are horizontal lines drawn at round number exchange rates, such as 1, 110, 120, 125, etc. And as you can see here, we have the Euro-US dollar pair, our chart spanning a couple of months. So we have a nice overview, and we have the 125 here and the 115 here. The 125 in this case is our resistance. As you can see, the price struggled to break above this line level, and 115 is our support. As we can see, the price really did struggle to break below this level. Finally, trend line support and resistance levels are not drawn by horizontal lines but by trend lines, which can be upward sloping or downward sloping. Since the Forex market likes to trend, trend lines are used to, you guessed it, identify uptrends and downtrends. Each time the price approaches towards a trend line, there's a high chance that the price will bounce off the trend line and retrace. Just like with horizontal support and resistance levels, the trend line should have a minimum of 3 price touches before it is considered important. Now what I have drawn here is a channel. Channels are similar to trend lines, only that they include a second trend line which is drawn parallel to the first one. So this is our first one, this is our second one. In this case, the upper and lower channel lines will be acting as our support and resistance lines. Also, it's worth noting that more often a support and resistance level is tested, the more significance is given to that specific level. And some would also say it becomes weaker, meaning it's more likely that the level will be broken. Okay, Enough theory about the strategy. It's fairly simple, and even though support and resistance is not a strategy in and of itself, for this video we will rephrase it a little. Our strategy will be to trade off of the support and resistance levels. We'll be looking at the first scenario here, the price bouncing off the level. First things first, we mark the significant support and resistance levels. So if we take a look at this chart, we can see that the price clearly struggled to break above this level and it struggled to break below this level here. So when the price approaches this level, we wait for the price to reach this region, and as it bounces off, we take our position. So if it bounces off the resistance level, we open a sell position here. And if it bounces off the support level, we open a buy position here. The stop loss should be placed a few pips below the support level or a few pips above the resistance level if we're selling, to have a safe way out if the levels are in fact broken. Now you can go ahead and try to find the levels on your own charts and backtest what you have learned with a demo account before opening any real positions. Thank you for watching. We'll see you in the next one.